Okay, welcome to the Chapter 15, Accounting for Purchases and Cash Payments presentation lecture. We will be starting off with just Section 1 in this presentation lecture, which is purchasing items needed by a business. Please make sure that you have the notes available so that you can fill in the notes as we go through the material here for Section 1, as well as any demo problems that we might be going through briefly in this presentation lecture that you can attempt before we go through them as guided practice in class next time we meet. Okay, so let's get started. Purchasing items needed by a business, Section 1. Here we go, let's roll. The purchasing process. When it comes to purchasing, what you need to realize is that this is when a merchandising corporation buys items needed in order to make a product to resell. So when it comes to purchasing, there's actually 4 stages that go into this. Requesting the needed items, ordering them then from a supplier, verifying that the items have been received and in the amount, quantity, and the exact item that was ordered, and then processing the supplier's invoice. So, and there's a couple of different ways that that can be done as well, whether or not we're purchasing for cash or purchasing on account. So when it comes to this, let's take a look at a purchase requisition. This is step number 1, which is requesting needed items. This is an example here of a purchase requisition. In this case, On Your Mark Athletic Wear, which is our organization, is going to purchase shoes in order for us to resell. So we are looking for 20 pair of soft cushion white, 10 pair of soft cushion black, and 10 pair of low cut white and low cut black. This is the requisition that gets placed. This means that our materials department, you might want to call it, or our manufacturing department, is going to need these things in order to make the product. So then, after the purchase requisition has been received, a purchase order is then placed. This is the written offer to a supplier to buy certain items. So we are going to order these different items, and based off of what the items are that we are ordering, the supplier is going to charge us a certain price per unit. So 20 pair at $50 per unit is $1,000. Do the math all the way through, totaling up a total purchase order of $2,300. Now, verifying the items have been received. So after the purchase order, then these items are processed and then sent back to us to complete our order. So from that list, then the items are included in a shipment box. In that box, you will find a piece of paper or a form, which is the package slip. When you look at that, that's going to indicate to you which items have been packed in this box. So the first thing that you want to do is immediately check that what is actually in the box is on the packaging slip, and then send to accounting to be checked against the purchase order and the supplier's bill. So if all of those match up, then we can go ahead and move forward with processing payment. So once we have done that and we receive the invoice from our supplier, when we receive the invoice, it indicates to us, again, what we had ordered. This is based off of the purchase order. So we have $2,300 worth of materials that have been ordered. It is indicated here by a stamp that it is due on 12/24. We have a discount of $46, which means what we owe is only $22.54 of that $2,300 that is marked here on the purchase order because of our terms 2/10 and 30. So not only can we extend discounts to our customers, but sometimes our suppliers will allow us to take advantage of discount opportunities. So purchases discounts. Purchases is an account that is used for purchasing merchandise. The purchase discount account is when we have a cash discount for early payment. That's when we use that when we record that journal transaction. The purchases account is the cost of merchandise. It is recorded in this account. It is a temporary account of cost of merchandise. Cost of merchandise is now going to be introduced as another category on our income statement. Now the cost of merchandise, which means there's going to be an expense involved with creating our merchandise to be sold to the customer. So the cost of merchandise sold, sometimes called COGS, cost of goods sold, or COMS, COMS, is the actual cost to do business and to sell our merchandise. Purchases itself has a debit side balance, meaning that the left side, the debit side is the increase side and the normal balance side, and the credit side is the decrease side. We will stop there, and I will see you here next time for the Section 2 presentation lecture, in which we will analyze and recording the purchases of merchandise on account.